All right. Well, thank you again for joining us today. Welcome to the next edition of the continuation, I should say, of the Navigating the Coronavirus Economy series. My name's Tom Dufour, CEO of Big Sky Franchise Team, and today's topic is extremely timely because it's that time of year for the annual franchise renewals, and most franchise systems have a fiscal year end of that ties in with the calendar year, which means that the annual franchise renewal is coming due here at the end of April. So in addition to tax time, we have franchise renewal time going on here. So to comply with federal and state guidelines. And I'm so fortunate to have on our as a guest today to talk through these, someone who's been on some of our other he's done a webinar here maybe 8-10 months ago, but I'm fortunate to have Pete Dosik, who is a partner with Shipe Dosik Law, and he specializes in franchising. That's his primary specialty, is the best way to summarize it. I know, Pete, you can explain some of the other things you do as well, but all things franchising, and especially helping with that. And I know you have worked with many of our clients and currently work with them and lots of franchise companies around the country. So with that being said, Pete, I'd love to turn things over to you and have you get us going today.
Great. Thanks for the introduction, Tom. I'm excited to talk about my favorite topic, which is franchising. And as you said, this is a timely seminar. In fact, it probably should have been done a couple of months ago if you want to be really timely about it. And every year we think we should start in December on getting the franchise update done. Some of our clients are already pretty far in the process. Others we haven't started yet. But as you said, most franchises, FTD is good through April 30th. So, you got 60 days. That's a good time when a lot of franchisors start the process of getting their FTD updated. So I have a PowerPoint presentation with some very exciting slides here. I hope everybody likes my amazing Zoom background. This is actually not a Zoom background. It is, in fact, outdoors, sitting here, getting away from the family and the noise. So anyway, Tom, we did a seminar I did about a year ago on the FTD and coronavirus and franchising.
That's right.
Back at my notes, and definitely did not predict exactly what was going to happen. I don't think anybody could have. But we've almost made it through this crisis. The end of the lights at the end of the tunnel now.
Yeah. And it's interesting. I'm so glad you could do the presentation here. The wise franchisor prepares, like you said, starts preparing for the renewal at the end of the year. So, they might have started preparing December 15th, and started getting things together and ready to do that. But you could say
those people probably have their Christmas cards out and Thanksgiving too. So.
That's right. Yeah. And we know that the reality is that's not likely. Most folks don't do that. And this is just a quick reminder to say, hey, if you're going to get in, now is the time to get that renewal started, because if you wait any longer, the chances of you missing of your attorney being busy in the beginning of April, the mid-April, to get things submitted and sent in, you're probably going to miss the window, not to mention any state registrations and the requirements there that I'm sure you're going to talk through here.
I'm going to start sharing my little presentation here. The topic is the yearly franchise renewal and what you need to know. So I'm going to cover 4 different things. I try to get about 5 minutes on each topic. And that'll be about 20 more minutes of people watching me talk. And Tom, I'd love your perspective at any time as well, or any other participants. And then we can have some time for questions also. So the first question is, why update? And I'm starting with this because I often get the question, do I need to update? And so you only need to update your FTD if you're planning to keep selling franchises. So just because you have existing franchises doesn't mean you need to update it, or if you don't plan to sell for some reason, then don't need to update it. And I do regularly have clients who sometime around August, they decide they want to sell a franchise, and then that's when they get started on the update. So yeah, you don't need to have it done unless you're actually planning to sell franchises. Um, as Tom mentioned, if you're on a calendar year, then your FDD will expire at the end of April. I'll point out, there's 20 or so, 23 or so states where you have to do some sort of filing and registration. And in those states, the expiration date may be different. A lot of them, it would be April 30th. California, for some reason, is April 20th. And then some states, whenever you register, it's good for 1 year. So if you registered on February 1 last year, well, you're about to expire in that state, this weekend. So it is important to just keep track of what states you registered in and the different expiration dates. And wanted to say a quick moment about the transition period, going dark and getting sales closed before you update the FDD. So, if you have your new FDD coming out this weekend and you had some people in the pipeline, that means you have to redisclose them with the new FDD and give them another 14-day review period before you could close that sale. If you're in a state that requires registration, there may be an extended period of going dark. If it takes New York 2 months to approve your new FDD, well, you can't sell a franchise in New York during that period. A couple of states have some exemption or workaround, but that's basically the rule you'd have to follow. It is common then, a lot of franchisors are scrambling to get deals closed before they get the new FDD or before the FDD expires. That always makes people a little bit nervous. I mean, there's more chance that something has changed or some material thing has different in your franchise system, and you'd be giving people older information. I know if I'm helping someone buy a franchise and it's March and I'm looking at the FDD from last year and information's 15 months out of date, from the buyer's point of view, that also makes me a little nervous. What's happened since then. I would always like to get the most current information if I'm going to buy a franchise. So another reason to move expeditiously on getting the FDD updated. One of the main costs and hassles and gating items for the FDD update is the franchise financial audit. It is a requirement if you're selling franchises that starting in your second year, you need audited financial statements, and an audit, that's the highest level of a CPA review, the most detailed, the most complicated. If you haven't gotten an auditor started on updating doing your audit for update, you should get that going very quickly. They get even busier than franchise lawyers around this time of year, and the audit can take some time to get done. I can just tell you my own personal view, though. I always try and get the FDD update done before my side of it done before the auditor is completed. That way, people aren't pointing the fingers at me for delaying things. I can point the finger at the auditor. So I try and keep track of when that's happening.
It's the other guy's fault, right, Pete?
Exactly. There's always a bottleneck somewhere in any process. That's just how processes happen. I do want to dig into the weeds a little bit about the audit this year because some complicated things have happened. And I'm not an accountant, so I'm just going to do my best here to explain it. But I would recommend you talk to your accountant about these particular issues. So the Financial Accounting Standards Board, FASB, created a new rule. Came out last year, got delayed for COVID. Now it appears to be in effect. It's called ASC 606. And this affects how you account for franchise revenue. And to be clear, this is purely an accounting question. It doesn't affect your cash flow whatsoever. So, if you owe someone a commission for selling a franchise, you owe them the commission when you sell the franchise. It doesn't matter about when you recognize the revenue from that sale. So what was going on previously, the typically way to understand accounting was that if someone paid you money for a franchise, you would take that income when their franchise opened. So for example, if you sold a franchise in 2019 and they paid you $40,000, their franchise opened in 2021, then in 2021, you would show $40,000 of revenue for that. I think I just messed up. No, if they sold in 2019 and they opened in 2020, then in 2020, you would show that you got $40,000 in income. ASC 606 wanted to change that. So you'd recognize the franchise fee over the life of the contract. So if they were paying you $40,000 for a 10-year contract, you would get $4,000 per year recognized as income. rather than all of it up front when they opened. They did come up with a very complicated 5-step process for deciding maybe some of that revenue could be taken into income earlier rather than spread over the life of the contract. But it was so complicated, most people just didn't bother trying. And what I found was happening sometimes is the lawyers were telling the accountants, hey, do something about this. And the accountants are saying, lawyers, no, you do something about this. And so nothing would really get done about it. Just a couple weeks ago, the powers that be came up with something they're calling the practical expedient, which was to simplify the process for recognizing the value of pre-opening goods and services. So if your work falls into these categories, you could, I think, if I'm understanding correctly, you could say, okay, of that $40,000, $10,000 was for the value of these particular types of work. And so we'll take that $10,000 into income when they open, and then leaving $30,000 to spend over the period, to take an income over the period of the contract. So this may allow for some early recognition of initial franchise fee. Definitely something you need to discuss with your auditor. And maybe we look at adjusting the franchise agreement to specifically address some things as being called pre-opening services. Why is this important is the other question. Why do we care? And for a lot of brands, it doesn't matter. But it does make your financials look worse. It's kind of the basic problem. Used to be, if you had $500,000 of franchise sales, you'd show $500,000. Now you're not going to be able to show all that. So your cash position is the same. You may have a big pile of cash sitting on your bank account, but the audit's going to show a very large liability because you haven't earned that $500,000 yet. That in turn causes some state regulators to look at your audit and say, gee, you don't have great, strong financials. We're going to impose some sort of condition on your sale of franchises in our state. So that could definitely affect the franchise. It is a complicated topic. I'm just giving a brief look at it there, but I'm available to answer questions. If people want to discuss this in more detail. My next topic, moving right along, just generally the process of how do we update the FDD. One thing we like to start off with is a big picture discussion. What happened in 2020? What changed? What worked? What didn't work? Obviously, a lot of things changed due to the pandemic. If your restaurant went to much more delivery, you changed your operating system, you changed a lot of things. That's going to affect what we put in the FDD for 2020. Then we also look at what are your objectives for 2021? What are you looking to change? Are you increasing fees? Are you lowering fees? Are you looking at different states? Did you have some particular challenges with franchisees that might cause you to update or revise some language in your franchise agreement? And I can tell you from experience, I can look up if the franchise has been around for a while, I can look at their franchise agreement and identify paragraphs that dropped in because one year we had a problem. So next year we came up with some particular weird language just in case that problem ever comes up again. I can guarantee you'll see a lot of franchise agreements in 2021 that mention the word pandemic somewhere, and that was never in there before. And it will say something about how we can change systems and change requirements if a pandemic ever occurs. And then we got to get into some details into the FDD. I'm going to mention a few of them. Again, these are sort of big picture items. There's a lot of nitpicky little details that go into an FDD. Item 2 is your executives and officers. Have those changed? Item 5 and 6 are your fees. Are you looking at raising your franchise fee, your royalty fee? Have you started a marketing fund? Are you changing those fees? Item 7 is to talk about the estimated initial investment. What does it cost to get this business started? One thing I don't often see, but seems like a good idea, would be a survey of your franchises. Ask them, fill out this chart. What did it cost you to get your store open? For the item 7 is underestimating things. That's an issue, and it should be corrected. And definitely, you can check item 7 against what's happening in the real world. Item 8 is information about your supply chain. One important thing in particular, are there new vendors that are required? And are you getting any payments, refunds, rebates, anything from suppliers based on what franchisees purchase? And also, are you selling stuff to franchises? Is that going to be new? Are you providing a software? Are you providing a special product to your franchisees? Item 19 is another, that's probably one of the biggest ones we focus on in updating the FDD. And this one got particularly complicated this year. If your financial performance of your outlets was affected by COVID, there's a legal question of, could you still put in the information from pre-COVID? And then now, of course, that we see the light at the end of the tunnel, financial performance is going to change again. Now, I would say if your financial performance was pretty poor in 2020 due to COVID and should be a lot better, then not much risk there, if you're underselling it. I would also say, look, if financial performance looked bad for your restaurants or your gyms or whatever in 2020, people will understand. I wouldn't hide it. If you hide it, someone can later claim you hid this bad information from me. If you put out the facts of how people performed and it's not great, that's the facts. And no one can later accuse you of not including that information. That's something to kind of dig into the details with your particular system. What information do you want to provide? What do you think financial franchisees are going to be looking for if they're buying it? Item 20 is the list of outlets open as of the end of the year and all your franchises. And if you actually find yourself struggling to make this list, that's okay. It's surprisingly hard to actually make a list of everybody open it in your system as of a particular date. I don't know why, but it does actually seem hard, especially as you get bigger and bigger. And one thing that's going to affect that, if you had stores that were temporarily closed due to the pandemic, do you still count them as an outlet or not? And that's a bit of a judgment call. If you reasonably, truly, honestly think it's going to be reopening, you may consider it still an outlet. On the other hand, you might want to footnote it. If you had, 2 stores we consider temporarily closed, we expect them to reopen, would be a lot better if you have a bunch of closed stores and you're calling them open just to look better. Again, the FDD, it's not a sales document. It's not supposed to make you look good. It's just supposed to present a list of facts as best you can.
And Pete, sorry to interrupt here real quick, but just to that point, that's a great comment you made about the temporarily closed locations or territories. How do you list that? And is there an extra box? But you said add a footnote. I think that makes sense. You put a little footnote that says we expect they're temporarily closed. We expect them to open, and at least then it gives a sense. It says, well, they might, we expect them to, but maybe only one of them reopens. But at least there was a number indicating that, hey, we can't predict the future, but we're at least accounting for it.
Yeah, exactly. If a store does close or they sell, that franchisee gets listed in the FDD as someone who left the system. But it's err on the side of caution, certainly. But if someone really was temporarily closed due to the pandemic as of December 31st, expecting it to reopen, that's legitimate. Finally, the franchise agreement, as I mentioned, every year there's some updates based on what happened in your particular system, updates based on what's going on in the world generally, just improvements. Every year gets a little more franchisor friendly, a little less franchisee friendly as lessons are learned. Particularly this year, you'll see changes due to the pandemic, but also look at what issues people were negotiating last year, maybe what issues were causing delays in your franchise sales process. And then you can make a judgment call as, is this an important point for us to include or not? I'll just give you one quick example from our experience. I'd added a paragraph a year or 2 ago, which specifically, this is to all my standard franchise agreements, not everybody has this paragraph, but it says, yeah, the franchisor has the right to talk to the franchisee's lender, has the right to talk to their landlord. I think that's true anyway. You don't need to put it in writing, but I thought it might be a good idea to have it specifically stated, because I had a situation with one client where the franchisee was saying, no, you can't talk to my landlord. That's somehow something wrong with that. So I decided to put that in there, and I got a surprising number of people pushing back on it and objecting to it. And I ended up to explain to people, yeah, we think we can do this anyway. We just thought it'd be nice to make it clear, and we still ended up arguing about it. So maybe that's when we take back out. It didn't seem like a critical point, and if it is causing problems in the supply in the sale, we can make those adjustments. In terms of the actual process, different people do it differently. Got some folks that like to read the FDD and send me notes on it. Some folks like us to have a questionnaire for them. A lot of times what I do is I kind of just update the FDD with stuff I know about and then send them a list of questions. A lot of the questions will be, has this changed? Is this still the same? Do we need to update this? And they can say yes or no to those things. But we try to there's no one size fits all process. So we try to adjust to what people want to do. Then the last topic I want to cover, state registrations. This is the map, which you can find on the internet if you Google map of state franchise registrations. I'm not sure who made it originally. I will point out, I do think North Carolina and South Carolina are incorrectly listed there. You only have to file something in those states if you don't have a registered trademark. Anyway, the more important point here is, as I started off at the beginning, certain states, you have to have an updated renewal in order to sell franchises. In all the non-registration states, as soon as you print your FDD for 2021, you snap your fingers and you're good to go. In the other filing states and registration states, there's some process. What we mean by filing state, that typically means you send them a piece of paper, but no one actually reads the FDD or does anything with it. Registration states, you actually send them the FDD, and in most of them, but not all, someone actually reads it, comments back for you, and that will take some time to actually get the FDD registered. Just to give people an update on that, more states moved to electronic filing this year because of COVID. They were allowing you to do, for example, some waived the notary requirements. Others said you could just do electronic copies, but it's still all over the place. There's no one system. I think New York is still requiring you to send things on a CD-ROM. I haven't had a CD-ROM burner in 10 years on a computer. So it's a bit everywhere. New York had the most trouble last year. They really struggled due to the pandemic and working from home. Some other states did a fantastic job. California, Virginia, some others really, had some initial struggles, but the folks, the franchise examiners there did an amazing job of kind of keeping up with what franchisors needed. Texas, just a weird one, even though that's one where you just send in a piece of paper, that was still taking some weeks for them to process the piece of paper. But we'll see for 2021. Hopefully, more of the states have figured this thing out. So that was a lot of ground to cover updating your FDD. And I know I tend to blow through it pretty quick. I'm going to turn off the screen share. Yeah, okay, that was about 24 minutes, well, 4 minutes of gabbing back and forth at first. So I was just about on track.
Yeah.
Tom, did you have anything you wanted to ask about that, or?
Yeah, well, I thought I'd open it up. If there are any questions, feel free to type into the chat box here, or if you want to, we've got a small group here. So if you want to just unmute, just raise your hand or type a note in, and we can unmute you to ask some questions. But I guess, Pete, one question I would ask while we're waiting for folks to type in here is, if I'm a franchisor, what should I do to get this renewal process starting? What would my first step be?
That's a darn good question. I probably should have led off my presentation with that. So I would say if your lawyer should have contacted you about the FDD update. If your lawyer didn't, then either they're not doing a good job or they're me, and I haven't actually contacted a few of my clients still about this. But no, if it's towards the end of February, you want to try and reach out to your lawyer, have them reach out to you, get that process started. So got plenty of time, and start the planning process. But really, let's have an initial kickoff call with the lawyer, kind of at the high level, and just map out the process as it's going to work for your particular brand.
Great, thank you. Other questions for Pete while we have him here. One of the things, Pete, you mentioned was about the new accounting guidelines and rules. And, obviously you want to certainly talk to your CPA regarding some of the specifics about it. But it sounds to me from what you're describing, and by the way, we'll for our audience here, we'll look to get a CPA on to talk specifically about that, to bring them in as a guest here. But we, it seems so new. And I mean, I even remember with the rule last year, and then the pandemic hit, and then it was delayed. People were frantic in the franchise community to say, what does this actually mean? How does this change things? And just concerned about it. It seems like to me, we're going to see, just kind of a repeat of the uncertainty right now. What's your sense?
Yeah, I can add two things we did learn from last year about this. One is I had predicted that possibly the state examiners would adjust their evaluation based on the new rules, that they would understand, hey, nothing really changed. So if we would normally put a fee deferral, we wouldn't have made a fee deferral for this company pre-ASC 606. We should adjust our evaluation so we're not adding fee deferral to this company only because of ASC 606. In my experience, that I was wrong. Like, they did not seem to adjust their methods for evaluation. And then the other one, we did have one auditor who actually in their footnotes put, here's what this would have looked like before ASC 606. So we tried to make it easy for the auditor to say, okay, we don't need to put the fee deferral on these folks. And that was a great idea and didn't work. The auditors they said they didn't, the examiners said they didn't have really the leeway to look at the footnotes and adjust what their outcome is. In case anyone's wondering, when I say fee deferral, what this is, in some of the states, California, Washington, Virginia, Maryland,
Illinois,
a couple others, Illinois, yes, thank you, not New York, but some of those registration states, if your financials don't look great, and that, that's a very generic phrase, they all have different ways of evaluating what that means, they will have some sort of requirement which gives you the option of saying you can't collect a franchise fee before the franchisee opens for business. Either that's got to go into an escrow account, or they just gets deferred. And so that's a big problem for your cash flow. Now, if you've got a brand where you sell the franchise and a week later they got their van up and running, that's no problem. If the payment gets delayed by a week. If you're doing a restaurant or a hotel, even where it could be a year or two before they open, deferring your fee, that's going to significantly affect your cash flow. That's what that means.
Yeah. Thank you. Any other questions for Pete while we have him? Pete, I do want to make sure people know how to get in a hold of you. What's the best way for someone if they had questions or they're looking to get their FDD updated and their attorney hasn't reached out to them yet and they say, well, maybe I should call Pete. What's the best way for someone to get in touch with you?
Sure, I'm sure you'll put my contact information in the notes here, but it's Peter Dosik, D-O-S-I-K. And if you Google me, there's only two Peter Dosiks in the world. I'm the one that's the franchise lawyer. The other one owns a jewelry shop in Boca. So you can probably figure out that's the easiest way to find me. The law firm is Shipe Dosik, SHIPE-DOSIK.com. So shipedosic.com. Phone number is 404-429-7814.
Great. Well, thank you so much, Pete, for being here. Is there anything you'd like to leave with our guest or with the attendees before we end the session?
I would just end by saying I hope everyone gets their vaccines as soon as possible. I'm looking forward to mine very much. I plan to get every vaccine they possibly give you. I don't want just one. I want all of them. There's a nurse with a needle. She can jab me with it. We'll be very happy when this is all, when we're all back to normal. So,
yeah. Well,
thanks a lot.
Pete, thank you for being here. I greatly appreciate it. This was phenomenal information, and we will get this up for a rebroadcast and available online as well. So thank you so much to our attendees for being here and attending this next edition of the Navigating the Coronavirus Economy series. Have a great weekend, everyone.